Hey, how you doing? And welcome to the last episode of Buy, Hold, Sell for 2023. I'm Ali Selby, and today we have a very special episode for you. We've asked our guests to bring along 3 of their highest conviction picks for the year ahead. These are stocks that they believe could surprise investors in 2024. Plus, because I love a little bit of drama, we're also asking them to analyse each other's highest conviction stock picks. To do that, we're joined by Hugh from Atlas Funds Management and David Wilson from First Sentier. Okay, David, we're going to start with you. It's one of your top picks for 2024. It's Aristocrat Leisure. Why are you buying that stock?
We think the stock is actually cheap for the amount of growth that we think you're going to be getting over the next 3 to 5 years. The PE is under 20. You've got a great US gaming operations business. It continues to take market share. It's gone from 18% to 25% quickly, and we still think that momentum's there. We think their digital business, which has sort of been flat over the last year or two, has the opportunity to grow. We're not certain when that actually starts to take place, but as and when it does, we think that will greatly assist the share price. Plus, also they're going to complete the Neo Games acquisition in the first half of this year, of calendar year 24. And we think that gives them another opportunity to sort of grow through. At the same time, you've got a great balance sheet. The company continues to buy back stock. So we think this is a stock really well positioned for calendar year 24.
Okay, Aristocrat really hit the jackpot in 2023. Its share price was up 30%. What's your thoughts on Aristocrat, Hugh? Is it a buy, hold or sell?
I would look at it as a sell. I mean, it's done very well. It's a great Australian success story, as David talked about. There's great market penetration. But looking at the social casinos, where you're playing the games on your phone, that is a fiendish business. But just the regulatory risk, I would be very, very concerned about. That's currently around about sort of 30% of their revenue. A wonderful business where you play on this and you can never win. So it falls outside the Interactive Gaming Act. I think the regulatory risks aren't really being priced in on that, and there looks to be a prime aspect of area to be regulated and have some quite adverse regulatory findings. I think coming soon, people under 18 can't download these games, and just that the risks are there are probably a little bit high. But a great story, but a little bit too expensive given those risks.
Okay, let's move on to one of your top stops. It's Woodside Energy Group. Why are you backing that stock over the year ahead?
Okay, I mean, Woodside's had a bit of a tough year. They've had falling oil prices. They had the spectre of the merger with Santos, which I really don't like as a Woodside shareholder. But ultimately have a range of great projects coming on. They've made out like bandits from the BHP petroleum acquisition. They've suddenly got these wonderful assets in the Gulf of Mexico, Northwest Shelf. They're the operator, the lowest cost producer in Australia with a barrel of oil cost of $8.50. 3 great growth projects on the road: Trident in the Gulf of Mexico, Scarborough off the Northwest Shelf, and then Senegal, Sagamore and Senegal coming on there. Really well-run company. We see the oil price as being artificially low. It's not doesn't account for the levels of political risk, particularly in the Middle East. If the Straits of Hormuz are shut off, suddenly the Qataris are taken out of the market, and those Australian producing LNG assets off the Northwest Shelf are going to be very, very valuable. We've already seen LNG prices recover in the last week when the Houthis in Yemen seized a LNG vessel. I think this poised to have a very good 2024.
Okay, over to you, David. As Hugh mentioned there, it didn't have a really great 2023. Its share price was down around 15% after a stellar 2022. What's ahead for Woodside? Is it a buy, hold or sell?
For us, it's a hold. You're right, it had a stellar 22, and therefore it was probably tougher for it in 2023. And we're pretty neutral on it. We think it's about trading at about valuation. It's still got some risk in terms of actually getting approvals for Scarborough, so there's still some sort of volatility around that. Balance sheet's in pretty good order. We agree with you that the oil price is actually sort of quite low and moderated, so for us it's a hold.
Okay, next up we have Woodside's potential bride-to-be in Santos. Why are you buying that stock, and what do you think of that potential merger?
Well, we'd be a really willing bride as owners of Santos shares. If Woodside want to pay a large premium, I'm more than happy for that to happen. So that's not really why we've owned the stock, but it's certainly an appeal now that's come into the stock over the last little while. We think that what we're going to see from Santos over the next sort of 3 or 4 years is as their projects come along in Barossa, in PNG and in Alaska, that the cash flow is going to come through very quickly over the next 3 or 4 years, and the company will de-gear very quickly to the point where Woodside is at the moment. So we think it's actually quite an attractive sort of growth story over those 3 or 4 years, and a de-gearing story as well in the context of a lower oil price.
On the back of that merger announcement, the share price popped around 7%, which was great for me because I own Santos. What about you?
It fell for Woodside shareholders. Yeah. So I think Woodside shareholders will be taken to that wedding with the shotgun at their back. Ultimately, Santos is an inferior suite of assets. Whilst the Papua New Guinea assets are great, they're not the operator, they're just a shareholder there. The rest of the assets, their fields in the Cooper Basin, we see the stuff in Gladstone, they're ultimately in decline. There's a lesser suite of assets. I think the only way this merger goes ahead is at a level of premium that's probably unacceptable for David. Ultimately, yeah, we wouldn't want to own Santos when you could own Woodside. A far better stock, better suite of assets, better growth projects, and lower debt, lower cost of oil. So yeah,
it's a sell.
A sell.
Okay. Next up, we have your second pick. It's Incitec Pivot. Why are you backing that stock over the year ahead?
Just the sheer amount of corporate activity that's going on there, or in particular sort of corporate action activity. They've sold Louisiana, so that's the check cleared I think about a week ago to CF Industry. So they're going to be, I think the next couple of days we're going to find out if there's going to be a capital return there. Also, we're going to see it's quite a significant buyback where they're buying back close to 16% of the share registry. That ultimately looks to be, if you buy that quantum of stock back, it's good things to that. We're also, the third flank of that is that the fertiliser business is on the share box. There's about questions about the acquirer. They're getting through FIRB, but if that does get through, we'll see a substantial sort of re-rating into a pure play, explosives play like Orica. So just given the just range of activities going forward, that's ultimately likely to put a fair bit of upward pressure underneath the share price.
Okay, its share price hasn't performed very well in 2023. It was down around 23%. Over to you, David. Is it a buy, hold or sell?
For us, Incitec Pivot is actually a hold. In the case of Incitec Pivot, it's never a boring hold. It's a bit like a hose on a driveway sometimes in terms of what's happening in the DAP price and the urea price and the ammonia price. And you've got a bit of a binary outcome at the moment around the sale of the fertiliser business. So that seems to be taking longer. They're probably negotiating on price, but this has happened in a period where Phosphate Hill has continued to disappoint. And it is quite a troubled asset as well. At times it can earn a lot of money, but sometimes it really disappoints. And it's had quite a tough period of late, which may be hurting the sale process. I think the market is largely priced and factored in the the buyback capital return that will take place. If you line up Incitec Pivot's valuation versus Orica, and there's pluses and minuses in comparing the two explosive businesses that would be there, in the event that the fertiliser business is sold, then the business fairly equivalent valuations. So for us, it's a hold.
Okay, last one for you today. It's James Hardie. It had an exceptional year in 2023. Its share price is up 90%. Why do you think it can do it again in 2024?
Well, it's also a little bit the reverse of Woodside because it didn't have an exceptional 2022. In fact, an exceptionally bad 2022, but a very good 2023, and we think that persists. This is a company that consistently gets 30% return on invested capital. It has now 90% of the fibre cement market. The fibre cement as a product has gone from 10% to 20% of the US housing market. It's a great success story. They continue to take share and penetration in the northeast of the US and also the Midwest as well. So we think that the earnings are intact, multiples not demanding. So we think that stock is a buy.
Over to you, Hugh. Is James Hardie a buy, hold or sell?
I think it'd be a very soft hold, Ali. I totally agree with David. It's been a wonderful Australian success story, growing heavily in the US, and this is the only building products company that has some meaningful intellectual property. If you look at the tile, brick and concrete merchants, the intellectual property hasn't changed since the time of the Romans, and that reflects in the margins that James Hardie can earn, 30% versus 3 to 5% the others. However, I think it's got a head over the top of its skis, had a wonderful year. The outlook looks a little bit less clouded. I think the valuation doesn't justify the current price, and there's potential for a bit of retracement, but I agree it's a very strong, very well-run company.
Okay, last up for you today, your pick is Bapcor.
Yeah.
Why do you think that stock could surprise investors in 2024?
Well, as David talked about earlier, there was a bit of an event in October. They downgraded their earnings. This is, for people that are not familiar with this is Australia's largest retailer of car parts, so very boring. Servicing cars to both trade and individuals. We're looking ahead, there's very low expectations, but ultimately what they sell is a lot of non-discretionary products. So cars still crash, cars need servicing, electrical vehicle penetration will be a positive with higher sort of consumables. And sort of looking ahead, we're seeing an increase in the age of the Australia's vehicle fleet from like 10 years to over 11.5. That results in a lot more car servicing. And ultimately, people need to keep their wheels on the road, and people will end up paying that. So what we've seen is that move in that first quarter, more of a delay rather than a final impact. And I think it looks a very attractive way to get into a good little mid cap at the moment.
Okay, over to you, David. Its share price is down around 18% year to date. What do you think of Bapcor? Is it a buy, hold, or sell?
For us, Ali, it's a sell. We think that their market share is under pressure in their retail business. It is the number 3 player behind Supercheap Auto, which is a really well-run business, and Repco. And in fact, actually, we think that Bapcor is a well-run business, but we think their smaller number 3 position in that part of the market is tougher. They've also sort of put into the market's expectations a cost-out story over the next few years. Invariably, and it doesn't matter whether you're Qantas, Telstra, BHP, NAB, whoever, generally cost-out stories disappoint in Australia, and we think there's every chance that Bapcor will also disappoint over the course of that time. So for us, it's a sell.
Okay, well, I hope you enjoyed that episode of Buy, Hold, Sell as much as I did. If you did, why not give it a like? I hope you have a wonderful holiday period, and we'll see you again back in 2024.